So first of all, thank you, Ethan, for the wonderful introduction. Also want to thank you, IG, for organizing this and providing some good refreshment. So this will be the part 2. And last Wednesday, is this Wednesday today? Yeah, it's Wednesday. Last Wednesday, I spoke about market psychology, behavior science, and we discussed about different behavior will lead to another behavior, will lead to another behavior. So a good behavior will produce good outcome. Bad behavior will produce a bad outcome. So I connect the dots of what's happening on the banking crisis, about inflation last week, and we discussed about it, how to understand what's exactly going on. So today I'm just going to dwell upon what we have discussed last week, but this time around, we're going to look at the charts, and I'll bring you back in time, why the flow. 3 years ago, I've been advocating that inflation is coming. Of course, if you can recall, 3 years ago, there's no such thing as inflation. Yeah, the interest rate is still paying you maybe about 0.1%. People are happily investing in property with a fixed tenure of maybe 1.3, 1.6%, right? So, but that 3 years ago, I've been advocating that inflation is coming, just to prepare the environment. But I'm glad that some actually took the advice and fixed their 2 years tenure for the mortgage rate. Then also explain about the interest rate. Is it going to pause or to cut? If you still remember that unlikely it's going to cut. There's a 50% chance that it may pause or it may continue to hike 25 basis points. So that's what we discussed. So it's not just my view, I also give you the elements of what I understand, why I say so, because it's through understanding the mind of Jerome Powell, right? So we discussed about that. But not to worry if you missed the part 1, it's separate, but yes, connected. So if you missed the part 1, you're still able to flow tonight as well. So we discussed about banking crisis, what happened and what's next. So I started with banking crisis because it's still very fresh in our mind. Then I work backwards. So in behavior science, market psychology, to understand the matters of what's happening, usually I like to investigate backwards. That means you study current problem, then you crawl back. What actually lead to today's problem? So today's the banking crisis is actually having too much money problem. That's where the bank have issue with a high interest rate. So we crawl back on why is there high interest rate. So that's what we discussed. So today I'm going to discuss about the market opportunity, the risk and opportunity. And this is what we're going to discuss today. So like what I say, the behavioral science of market is we study into behavior. And collectively, we can see the investor behavior, traders behavior, events, and they tend to repeat itself. So today, I think towards the end, I'm excited to share. I'll bring you back to 1929. There's a lot of similarity. There's unfolding. We're halfway mark. There's another halfway mark to go. So we're going to do a comparison. I think it's very interesting on comparison that we're going to do. And so today that lead me to part 2. And again, maybe I'm going to start off with the market future trend, the risk opportunity, and why 2 years ago, the 3rd week of 2022, I have abandoned my plan to go long on US. For long term, I prefer to trade them. And for China, Asia, Singapore, I prefer to accumulate them. And for commodities, I prefer to buy them. So I will discuss about that tonight and with charts. So I'm going to bring you back to a bit of history and also some forward looking as well. So at a point in time, why I have these thoughts. Yeah, so through technical analysis. So last week was fundamental analysis, but this week will be technical. So basically what I'm trying to present to you here is that we all can do it, what I'm doing here. So I do not have a team, basically, although I have a company, but I'm very much of a one-man show. Yeah, so if I can do it, you can do it too. Okay, just apply Google. Google is a good search engine. And of course, with ChatGPT is of even a greater help. It really speed up my analysis process. So now, this is a disclaimer from IG. It's necessary that they requested me to put it up. So please take a few seconds to read. Yep. Okay, and that's my disclaimer. So what I'm going to present here is, especially tonight for this part 2, a lot of practical. And definitely it's not a recommendation. So what I present here is definitely from my own conviction, for my own consumption. So if you feel that you want to go ahead to buy the commodities or buy gold later, I hope I have time to talk about gold as well. Please consult your licensed broker who is IG. Yeah. And why am I doing this with various organizations? And I just enjoy this, yeah, to share what I know. And what I'm trying to achieve here is to create a lateral thinking skill for every investor and traders. That means we've got to think beyond what we have read, what we are reading, and knowing when to take a calculated risk. So I've always emphasized about calculated risk. So do not engage yourself with an uncalculated risk. So if you engage in an investment or trade with uncalculated risk, so basically you're just a gambler. So we are not gambler. We have to be responsible for ourselves. So if you're a family, you have to be responsible for your family as well. So please do your sum, do calculated risk. And with market uncertainty like today, it's very uncertain, but I hope to will give you a crystal clear understanding. I hope that after the session, you feel like you're wearing a Nike Air shoes. Yeah, the year 2023 version, yeah. So, and with a bolder risk when opportunity arises as well. So throughout the session, I hope that you're able to see some opportunity here, especially in the Asia market and especially in the commodities market as well. So do join me to take some bolder risks, calculated risks after this. So today, I think I'll sit down. The last session I stand up because basically we explained about fundamental, but today we're going to technical. So I will sit down and we're going to look at charts. Okay, so for those that know me for the first time, and I was a floor trader. I studied engineer, but never practiced that. Then in 1990, was it 1995 or 97? I lost count of time, but 1995, yeah. So, you know, Nick Leeson, Barings, the boy that collapsed Baring, he was out, then 2 weeks later I was in. So I missed him in action. So I follow after my heart. I think I like the financial market, though I have an engineering background. Never practice, so which I'm glad that I stay in the environment, because it's through the trading floor I have learned the most about behavioral science, because in the trading floor itself is a market chaos. There's a lot of trading activities. There's a matching of trades. So of course, in today, matching of trade is through computer bits and bytes, buy and seller. You're seeing off the screen, but back then the matching of trade is by human power. So within the human power, we witness a lot of greed, fear, confidence. Confidence also includes insiders trading as well. So we saw a lot of that. But when I was in that floor environment, I don't see it because I don't really enjoy the floor environment because my personality don't fit into the environment. These traders are generally very aggressive in nature, but I'm a bit more domesticated. Yeah, but anyway, I stayed on for about 3 years until I became a house dealer, and I requested for a transfer to become a dealer. But on the screen, when I look at the screen, everything pops out. Say, wow, what I've learned on the floor, the screen makes sense to me. So finally, I'm able to understand on the screen, but not on the floor, that I'm able to see what is the fear and greed of the market, and also the confidence and insiders trading through the screen, but not on the floor. But most of the floor trader back then able to see all these on the floor, but not for me. Yeah, to me, it's just chaos back then. But on the screen, it was so clear to me. So then, of course, 13 years ago, I became a full-time. And of course, besides trading investment, I also have my own other business and sidelines as well. And recently, I think I just convert my own e-commerce to trade in Sing dollars instead of US dollars. So for the longest time, my e-commerce platform has been all in US dollars, but I decided I just want to be proud of Sing dollars. So those who want to buy my products will be in Sing dollars, something like this. So I think during this course, I'm also very happy that I became an expert in price behavior study. I also work closely with attorney, especially, or lawyers in Singapore, they call that. When there's trade dispute, different set of lawyers will represent either the borrowers or the lenders. So of course, I'm an expert in studying the price. I will write report on their behalf. Yeah. So that's about me. And tonight, really a pleasure to be here. And I'm going to start with, I'm going to work backwards. Yeah, work backwards is that let's try to understand about the market trend, a bit of the past, and also into the future for US market, China, Asia, and Singapore market. So now the first question is why US market is up despite of uncertainty? Do you have any answer that why the US market over the last 3 months has been moving up despite of bank run crisis? Is the bank run crisis over? What do you think? No, right? It seems to be over. And there are two elements here. Is the inflation pressure over? Not too sure as well. It seems to be under control. So it's like very murky, right? So the bank run crisis seems to be over and the inflation pressure seems to be cooling off. Seems to be. But is it true? But we're going to study that. And in fact, I think beginning of this year, I've been going around and I've been traveled to other countries as well to give some market outlook on 2023. So my first January, February outlook for 2023 was, if you still remember, in beginning of this year, where was the market at for US market? When I talk about market, I'm referring to US market. So beginning of this year, where was market at? It was still on the low side, yeah, so under pressure. So my title back then in January, February, it was Market Outlook for 2023. Back then it was, I believe the first and second quarter was seeing bullish market. My title is revolving around short-term bull, but as the year progressed in 2023, we're going to enter into a very volatile market, uncertain market. So we are crossing into already in the second quarter. Market is still up, but I believe that in a short while, we're going to experience some great volatility ahead. So volatility is good for traders, but definitely not good for investors. Yeah, so if you are traders, I think you should welcome that volatility is coming up because the bank run is not over yet and the inflation pressure is also not over yet. Yeah, so come to a point, the market will rally, you'll come to a point where traders, investors will look at each other, say, hey, you know, bank run is still there and inflation pressure is still there, and why the market is up. Then if there's uncertainty of the market, then the sell side will come. Okay, now let me just give you maybe a 5 minutes video on, I'm going to run through 3 videos, which is it kind of like, it's an archive of what we shared. So later on within the video, also back then in January, also projected why in 2023, at the beginning of 2023, my outlook is short-term bullish, which is true, and followed by range-bound market. And I'm just going to play this video to you. Okay, I'm going to share from 2 minutes. And so this afternoon, I'll do some homework. So just to save time, 2 minutes, 24 seconds. So basically, I just want to demonstrate to you that was in the beginning of the year, you could see that market is still on the downside. Yeah, that was January. After January, the why after January, I felt that the market is going to continue to move up. So then the market was still under pressure. Yeah. So I'm just going to play this clip for the next 5 minutes. Yeah.
Now this is how it works here. First, we have to start off with a point, which I would like to use this. And then we try to find the best fit. Now the reason of doing that is that once you have discovered that we have more than 3 picks here. 1, 2, 3, 4. We could see that it kind of aligned perfectly together. So now, whenever I see this, I would classify this as a very classic or standard downtrend line. Now, whenever this happens, is that as it developed, as of the whole of last year, I think you understand the mandate here is that we have discussed about it, that last year was a downtrend, so the whole idea is to sell into strength. And before 2022, it was generally uptrend, but on the 3rd week of 2022, it kind of changes everything. The opposite was true. So the whole of last year was sell in strength, but we could see that last week. Now what we're looking at here is the weekly chart of NASDAQ. Last week, it convincingly broke above this downtrend line. And for that reason, it kind of merged with the fundamental understanding here is that we believe that because of the tame numbers in the inflation, likely the market is going to have a short-term rebound. And the strategy over the next few weeks will be, I will look out for every opportunity to buy into dips. I will look out for every opportunity to buy into dips, at least for the first quarter, around there. But subsequently, I believe that the market will enter into a range after around the first quarter. And again, let's study into its fundamental reason first, then we'll get into the technical studies. And on 14 December last year, Jerome Powell given the market a very important clue, and this is what he said. He said that I wouldn't see us considering rate cuts until the committee is confident that inflation is moving down to 2% in a sustained way. So what happened here is that a lot of investors and traders was hoping that the Fed will cut or reduce the interest rate because that the inflation, the CPI number, has been on the decline. We were hopeful until he said this. Now, what he's trying to say here is that no, as long as the inflation or CPI number is at 5%, 6%, 7%, or even at 4%, then as it moves to progress to 5%, it is still not good enough. What he wanted to see is that the CPI numbers or the inflation has to come down into the 2% zone and stay there, stay under maybe about 3%, around 2%, then he will consider a rate cut. And for that reason, let's look at the technical reason. Is there a merge? Is there a affirmation that it match with this fundamental reason? Now let's look at the technical chart. I think the first part why I've discovered that where I believe this bullishness is going to be a short run. Maybe we'll enter in the first quarter. Now this is what I'm seeing here technically, and what I'm going to do here is I believe that this short-term bullishness will enter into the first quarter as it reaches a certain peak. And you have to understand that around the world that the inflation is still pretty red hot. In Australia, in New Zealand, in Singapore, in Japan, that the inflation is still on the climb. It seems like there's no stopping. And a lot of, as I conduct different classes, I surveyed different classes, and about 70% of us, the classes, say that they do not believe that the inflation will come down to, I'm referring to the US CPI, will come down to 2% in a sustained manner, at least for this year in 2023. Now, so as the market on the climb, I believe that the market will reach a certain peak and will start to do a range bound. Now, you have to understand that in behavioral studies, when the market range bound, it means that it's range. It also means that the market is uncertain. This is what I'm seeing here. Now, so this is what I'm seeing as it enter into the first quarter, or maybe around there. I cannot be exact, but I believe that market is going to enter in the range bound, means that they're uncertain what's ahead. Now, I'm going to do this if you still remember how to construct a downtrend line. So first we study the fundamental. Now I'm getting into the technical. Now, we first have to find the most significant peaks, which is here. And I'm going to join the dots together. And this is what I believe here, that it could be the first significant peaks, then followed by second and third, and you join them together. And this became the primary downtrend line. Now I'm going to type this in. Primary downtrend line. And this will be the secondary downtrend line. That's what I'm seeing. So generally, I'm seeing that the first quarter market will be maintain its bullishness. Then after that, the whole market will take some clue from the CPI again. And likely, I do not think that the CPI is going to enter into a 2% zone in a very sustained manner. For that reason, market range bound. But as the market range bound, it does not mean that there's no opportunity. What I'm seeing here is that in 2023, market is going to be very volatile, and volatility is great for traders.
Okay, so my statement is pretty consistent, right? Volatility is great for traders. Now, then let me just go back to the slides here. Okay, so that presentation was made at the beginning of the year. So are we right? We are quite right on the spot. Yeah? Okay, now you have to understand that when I make that presentation at the time, that was December 2022, the latest data I have, it was here. So what I observed here, and then the market was still under pressure. Yeah, but what I saw is that the inflation number, the CPI number, has been coming off. So therefore, I believe fundamentally that it seems good, and there's a proposition that the US market may rebound. But technically, it also showed me that then, okay, maybe what I do is that I'll go to technical. So basically what I refer to is that come to a rebound. Now we're entered to a rebound. The title, remember, is the short-term bull, and the rest of the year will be a range market, a volatile market. Now, so what I believe that the latest number, and that was this was prepared. Then of course 6.5, I believe, come to a certain point, the inflation number will be stagnated like this. Now, I'm not suggesting that the next CPI will be 6.5. So basically what I'm trying to showcase here is that come to a point, I do not think that the CPI will come down to 2% and stay there, because that's what the Fed want. So now we could see that the latest number from 5 to 4.9, the CPI number already kind of plateaued already. Okay, so now the next few CPI number throughout the year until this end of the year, I'm not projecting 6.5, but I'm just going to showcase to you what do I mean by a range CPI. Now, if it's range CPI, is no good at all, because Jerome Powell make it very clear that I want to see 2% come down to 2% and stay there. Yeah, so if it's stay at 4.9 throughout the year, it is still not good enough. Okay, so now, so come to a point that now second quarter is the market is still going up. Come to a point that the investor and traders realize that, hey, the inflation is no good, then market will have its correction. That's why I see that market is going to be quite volatile. So as an investor and trader, sometimes we have to also try to be a little bit creative and project what's coming ahead. So when the technical reason come to pass, then it gives me a lot of thrill and excitement then. I don't have to be right all the time, but it's a very intelligent guess that as it track along, we know how to play along with the market. I think that's very important. So let me just go to the trading view to give you a sense of, so later on we're going to study this 1929 in today's market. Now, so then it was the first quarter I presented. Now, just to recap for those, because sometimes video we can fall asleep, right? But this is now it's live. I think you should pay some attention here. So then in January, I presented here is that how to construct a downtrend line is basically the rules are simple. I have my own rules. So you try to connect. The first rule is that you try to identify at least 3 significant peaks, at least 3. The more, the better. Then after that, I try to make adjustment. In this case, I don't have to do much adjustment. It's already quite nicely fitted, if you can see, right? So there's 1 peak, 2 peak, 3 peak, 4 peak. And that was the presentation I made back then. So I suspect that because of the lowering CPI, and it have broken this beautiful downtrend line. So my expectation for the market, it will be, let me see. Yeah, I'm looking for this guy here. It break. So then I was expecting the market to go up. So it did. Yeah. So along the timeline, I believe that investor would realize that the CPI number is not that great after all, because it's not at 2%. So market will come down, you'll move up, come down, move up. So generally, this is what I see in 2023, but of course not also to include some surprises. Yeah, so I do not know what's the surprises. It could be bank run. So at the point in time of production in January, I have no idea that bank run is coming. Okay, but now with an added element, bank run is a real threat. So in part 1, we discussed about the big threat of the bank run. So that's what I'm saying here. And let me just delete off. And let me just draw a more beautiful one. So basically, that's my projection. I think we're pretty right. So as long as along the timeline as it track, we got to find the primary downtrend line. Remember, the primary downtrend line is that we try to find at least 3 significant peaks. So now it's 1 peak, second peak have not formed. I do not know, but as it progresses, we can just track on this primary downtrend line. So this primary downtrend line will be the real resistance. Okay, so For that, I think that will give you some clue and idea how to construct a downtrend line. So all these construction on downtrend line is applicable throughout all markets, including stock market as well, individual stocks, different markets. But when we use technical analysis, you do your best, try to trade or invest in something that is of liquidity. That means if those penny stocks that you're trading in is illiquid, sometimes even zero lots traded. So I will not apply technical analysis to it because it became untrue. Because I need the mass market participation so that technical analysis became true. Because mass market participation is important. So for me to chart out their behavior. Again, I say the behavior lead to another behavior, but I need the masses, which is investor, traders behavior to form the chart. Okay, so I think that will give you some clue what market we can chart. A liquid market we can chart. Okay, so you can use this very simple, easy to understand concept and apply throughout every market. Okay, so I'm going to go to the slides again. So basically, I covered the first part. Okay, so about the US market. Now I'm going to move on to, oh no, not yet. So now I think those who join or maybe been following me since last year, this may not be new to you because I say that my strategy since the third week of 2022, which is the third week of last year, my long-term long in the US market have changed. Since when? Since the third week of last year. Why? Okay, I'm gonna show you why. Since the week of 2022, why I've changed from a long-term hold in US market. I choose to, I wouldn't use the word abandon, but I choose to take profit on my long-term hold. But after the third week of 2022, my strategy for US market is to trade them. And Asia market is to accumulate them, and commodity is to buy them. So I hope they have time for Asia market and commodity market subsequently. Okay, we'll go through that. But let me just share with you why on the third week of 2022, I prefer to trade the US market instead of buy and hold. I do not prefer to be a passive investor. Knowing that in 2021, for those that also following some of my talk that I'm invited to, I've been start advocating that interest rate inflation is coming. I've been talking about that since for 2021. So I've been timing it, and on the third week of 2022, it came technically. Then I know exactly how to react. Okay, so sometimes to read about, understand about macro is important. Now, let me just share with you another video. This will be a shorter video, just 1 minute video. That was the longest. So my title back then was not related, but I think along this video, I also showcase, it's posted on my YouTube, so you can just go and view it after this. Every week I'll post something. But from this video, you can see that why third week of 2022, I have changed my strategy for the US market from a long-term hold to just want to trade them. I'm not interested to be passive investor in the US market because the time and season have changed. So personally, I believe that the last 40 years of rolling good times have shifted. Okay, but I hope that you don't bring heaviness to you that there's nothing to invest, but we're living in even a better side of the world, which is the Asian market. We will have some volatility, definitely, but in the further future, I think things will get a bit smoother. Now, let's look at the why third week of 2022 I've changed my strategy.
Now, same thing for major uptrend. The rule applies that what we should do is to connect at least 3 significant trough. So that's what we did. And then what we're trying to do here is that we try to find the best fit. That's on the weekly chart. So we saw a super bull run between 2020 to 21 with this super nice uptrend line. Now, what happened here was we discussed about that before. And on the third week of 2022, and this line, this candlestick, it broke below this super nice uptrend line, and it's very convincing that the transition has begun, which is from an uptrend to a downtrend. And now we are part of the downtrend, where my focus always moving forward in 2022 is to sell into strength. But that doesn't mean I do not buy on dips. It's just that on buy on dips, I make it a quick one, but my focus is to sell into strength. Now, I'm going to go back to the daily chart to discuss how are we going to manage between the primary downtrend line and secondary downtrend line.
So this was on the, I think, 16th of August, and that was my, after COVID, the first time we can gather. And that was my first seminar, physical seminar I did with IG. So then was not so many, but that was my proposition to short the market at a point in time. So the market did continue to come down and break this low somewhere in October, November, December. Okay, so that was my take. So you could see that how I always use the word easy, but it's not too difficult to construct the uptrend line, downtrend line to form the boundaries of the market. Yeah, so at least it gives us a the path, yeah, how to track, you know, when to take profit, when it's time to sell short. So at the point in time, my motivation is more like I want to sell short than anything else. So, but moving forward, I think I still want to buy on dips. But I'm very mindful on buying because once it starts to turn, things will start to come down really fast. Okay, so that was my take back then. Let me just go back to the slides. Okay, so we're done with this demonstration. Okay, now let me just talk about China, Asia, and Singapore market. I'm just going to lump it up with one China market. Then after that, I'm going to give you one example on Singapore stocks, yeah. And before I get into the China market, let me just look at to understand the concept about. So I have this concept that after about 27 years in actual being a working adult, after 27 years in this industry, so I kind of figure out that every market, every stocks, or most of the stock, they move in cycle. Every cycle, there are 4 stages. So that's what I begin to realize. And you can apply in different markets and stocks. So now, this is a very classic, this became a very classic example. So I will always use this. In Singapore market, I'll use Top Glove as one classic, so Singaporean can associate. But I think most of us are very familiar with Tesla. So it became a very classic. You can see there are 4 stages in every market. There's the income stage. You can call it the range stage or the R and D stage. Yeah, so basically market is moving nowhere. And that's happened when Tesla moved into, it also helped by the COVID. Yeah, everybody go into technology, whatever. So Tesla also benefited, COVID started. So there's this maybe a new initiative. But if this initiative can be sustained, this initiative, it will lead into growth. But if this growth is not being carefully managed, it will lead to decline. So that's what we're seeing here. So in our this weekly forum that we have, that I identified that there was a 2 lower low. Now, if you identified the growth in this market, happened to be Tesla. Now in the growth, there's a typical behavior that each trough it is a higher trough. Okay, but on this particular day, on the 31st of Jan, if you look back, I saw a 2 lower trough. But before that, each trough was higher than the previous. So behaviorally, technically, it makes sense. Yeah, growth have to grow from strength to strength technically. Why I have this idea that I felt that maybe we're coming at a point in time, that was January last year, that I felt that the growth of the Tesla may not be too sustainable. It may come down. It was because a lot of people start to ask me about, can we buy Tesla at $900? You know, you have to understand that there are 7,000 stocks in America, but why Tesla? Almost all my contact ask me about Tesla. Can we buy Tesla? So when masses get so crazy, so hype out about one market or one stock, then that's where we have to be careful. Then I check on my technical analysis. It shows me that there's a lower low. Then I got to be very cautious. Then of course, I also look at the fundamental, the development of Tesla as well. There's a lot of competition that's coming up. Yeah, so it may lead to, and it's of course at the point in time is really high valuation. The P ratio is you're talking about a few thousand%. So that's pretty ridiculous, right? So then of course it'll lead to a decline. And today I think it's about hovering about $180, but I think it's still declining. Yeah, it's still having that formation. So decline is the characteristic is a lower low. So that's what we're seeing here. So I just want to give you a understanding of just very technical. But if you think in terms of behavior in every cycle, whatever, in every cycle, if you study economics, they have different terms, but I also have to come with my different terminology as well. So I classify as income, value, growth, and decline stage in every cycle. Now let's go and look at the China market. And okay, just to showcase you the Tesla, the forum that we have. So that's what we have here on Tesla. Okay, so Tesla on the 2nd of Feb 2022, and that's what we share. Okay, so that was last year, January, that we identified that there's two lower low. So at the point in time, it have not happened yet. So basically, I just asked a few questions, question 1, 2, 3, and you can basically, my whole idea is to ask questions so people will start to think why. Yeah, so I try to lead them to that. And let's go back to the chart and let's look at China. Now the topic is after the third wave of 2022, my mandate for trading investment is that I want to trade the US market, not interested to buy and hold, not to be passive for the US market, but for Asia market, I find that there's a reason to accumulate. So I believe that the next wave, as US or the West come down, investor and fund, institutional fund or family fund will find value in Asia. Yeah, so I think there's a, of course, when US market down went to recession, we will also suffer, but I believe that the magnitude will not be as great as in the West. Yeah, so now, so this was what I have posted in 2016, in case it's too small, 28 July 2016. And on my Facebook page, I state that there are 3 reasons time to get into China. So was I right? Pretty right. Okay, now, so what happened then was, in fact, throughout all the Asia market, I realized that this trend, including Singapore. Do you realize that in Singapore in 2010, since I'm Singapore, I talk about Singapore market, in 2010 and today, the stock market STI is still the same price, 3,002. Yeah, from 2010 until today, the stock market is still the same price. But has Singapore grown from strength to strength? Yeah, definitely we have grown from strength to strength. In fact, Asia, Southeast Asia, we have grown even stronger after COVID. That's what I see. Yeah, when I travel to Indonesia, I travel to Malaysia, I'm seeing that the vibrancy is there. In fact, we have become stronger with COVID. So is Singapore as well. Singapore, we have become stronger. And because of the COVID, we took over Hong Kong, we became the financial hub. It is not official, but what I see, I think it makes sense. So Singapore tried to be very low profile. We don't want to be at the top of everything. But what I see here is that Singapore, because of COVID, we became the financial hub. We overtook Hong Kong. We became the air hub. We became the trading hub of Asia. We became the bioscience hub. There's so many hubs that we claim. So you can see that, hey, how come the STI stay at 3,002? So something is wrong, right? So there's a bit of undervalue or not being noticed. So same thing for China, same thing for a lot of Asia market, that over the last few decades, the market have not moved much, if you notice. Yeah. A relative comparison is that US market has been moving up a few folds, many folds since 2010, 2007, 2008, many folds. But how about Asia? We're doing very well. The GDP for China, the whole trading numbers are very good. But how come it's still stagnated? So something is wrong, right? So can you see the value there? And now China, it was this. So you can see that for longest time in the 90s and 2014, China market, China A50, it measured the blue chip stock of Shanghai. It was still the same price for many years until, where was this? I was there. Also, yeah, contributed to the work to prepare for the market, very small work, yeah, very small bit of work for the China, Shenzhen China Connect. Hong Kong Shenzhen Connect and Hong Kong Shanghai Connect. That's where the first time in 2014 and 15 that global investor can for the first time buy China stocks through Hong Kong. Yeah, until today. So they create a surge in the market, and that became a value, right? Because I say that value is an initiative there was a good initiative. Finally, for the first time, foreign money can pour into China. And then, of course, it also collapsed. The collapse reason was because the system in China cannot take the volume. It's a technical reason, and therefore it collapsed. So when it collapsed, I see that, hey, remember every cycle there are 4 stages: income, value, growth, and decline. So I identified that this is a value stage has been done, and I could see that the foreign money is pouring to China, and that's where my first contact point of investing into China. So during this period, so I came back in 2016. I wrote about this very short article on my Facebook page. And you can see that the even recent, I prepared until Jan 2023, but today is still about there. It's a bit lower, but it's still about there. But you can see the progression of growth that the trough, each trough is a higher trough than before. But of course, if you can compare about all these, it's lower, but of course, maybe during Q&A, you can talk about it. But generally, I'm seeing that you can see that the China market has enter into a growth stage, and it's just at the beginning of the growth. Yeah, so if you understand about this concept, every cycle there are 4 stages. So what I see that China already passed the income, value, and now it's part of the growth stage. And Singapore is still here. Yeah, if you're going to compare Singapore. So North Asia, we are here, but Singapore will stay here. But I think in a matter of years, we may able to see some value proposition, means that it may break 3006. Yeah, but there is some time, some years to come. Yeah. So now the other reason I have to point to you here is that why I accumulate Asia moving forward since third week of 2022 is because I'm seeing that there's a reason to believe there's a flight to quality. Now, flight to quality, what does it mean? It means that investor find that this particular assets is not as juicy as before. So money is still there, but they want to find a safe haven. Okay, it's not just Singapore, but Asia. Now, so first time in my life, I saw this, being 27 years in the market, is that maybe most of us are either Malaysian or Singapore here. Of course, yeah, outside Malaysia, we always welcome you to be part of us. And I think being a Singaporean, we understand that Singapore market is not too vibrant, and we will always complain about Singapore market is a bit embarrassing, you know, because when US market down, we down much more than US market. When US market pick up, we pick up, yeah, we pick up, but not in no measure the same magnitude as US market. So whereas compared to Singapore market is boring. So what happened here is that why do this measurement? Because that was in 2021 December, crossover to 2022. Now, when did the US market start to melt down? It was beginning of 2022. Now you can see that for one solid quarter, the US market meltdown, literally one solid quarter. But this is the first time in my life, 27 years as an adult investor. Yeah, I saw this phenomena that for one full quarter, Singapore STI go opposite of the US market. So it's quite a phenomenon. So you also demonstrate that, hey, you know, whenever there's crisis, fund will flow to Singapore, which is important because it forms a support. Now, another proposition that I see that even a bigger market, why Asia, is if you look at the bonds market, I didn't prepare the chart, but I think it's easily available, even in IG platform, is that try to look at the bonds, because bonds is important. Bonds is where the government raised fund to feed the economy. So if you can look into monthly chart over the span of last 20 years, I think that's good enough, that you will realize that the US bonds has been selling even today, more than UK bond. If you look at from the peak to current or recent low, the UK bond has been on the down move, but there's one bond that is really interesting. It's very sizable as well. The China bond is moving up. So to me is that I'm not particular sentimental about, because I'm an Asian, I like Asian market. I go with the flow where the hot money is. Where if you look at the China bond, right now the China bond is moving up. And every turn is a higher low. Every turn is a higher low. So it also demonstrates to me where the hot money is going into. And China market is going to China market. And we also have to understand that Asia market, especially Southeast Asia, we, especially Singapore, Hong Kong, and Taiwan, we are island state. So island state, we have nothing, we have no resources. We depend on the export. And who is our number one exporter? Singapore, Taiwan, island state. Even for Taiwan, number one exporter is China. That means as long as China continue to grow, they have to consume. As long as China consume, we produce, we sell to them. We are fine. Yeah. So and good thing that what I see here is that the China bond has been moving up, and I think we should be quite all right for Asia as long as we produce and sell to China. So it used to be, and it still is, that we depend on US because US is a big spender. But you can see that the trend have changed. That the Chinese is also a big spender. Tourism depend on the Chinese market. Yeah. So in future there'll be other things that we produce that Chinese. We hope that Chinese will buy from us. So that's important. We need them to spend, so we produce and sell to them. So that's the economy, right? And just want to showcase one chart why China is important because of these are export number. And you could see that, let's look at somewhere that's very close to us, which is Indonesia, Malaysia, and Singapore, right? Now, yellow represents China, that we export to China more than gray. Now, gray is US, okay? And Malaysia export to China, which is in yellow, more than US. And Indonesia especially is important for them to export to US because 23%, that was 2021 numbers, by the way. Okay, so is export this much compared to US at 11.1%. Okay, so I just want to showcase to you why China is important. So the China stock market is also, to me, a benchmark. As long as it continue to grow, and the rest of the indices, Asia indices, should be okay. So this is one article from IMF, or sorry, article from CGTN. Okay, IMF say that China will remain the economic engine for Asia Pacific and the rest of the globe. And what do we have here? Okay, I just want to showcase one Singapore stocks on the relationship of, now you understand the concept that every cycle there are 4 stages. Income, value, growth stage. So for Asia, I always look out for value. When they cross value stage, I'm very particular keen. Should I accumulate them? Okay. Now, just one example on Yang Zijiang on our weekly forum here. Okay. So what I do is that Yang Zijiang. Okay. So when did we share this in Yang Zijiang? 20th September 2022, 20th September. Okay, so I share this, Yang Zijiang. I'm not too sure if you can see. There's a period of consolidation, but I saw this break. Just imagine it box up the whole thing, and this break. Then it became, it excites me. Could it be Yang Zijiang enter into a value stage and about to move up? Okay, now that was a sharing I did on the 20th September last year, which is not too far away. It's about slightly more than half a year ago. Now let's look at Yang Zijiang. So then the price was at 102. And let's look at Yang Zijiang now. Okay, that's the bonds. Have I shown the bonds yet? Okay, I just call up one stock called Yang Zijiang. Just want to check where is Yang Zijiang today. Oops, Yang Zijiang shipbuilding. So that was the point of sharing. The purchase at about 102, and then after that entered to 1.4. That's about 40% gain. Yeah, within a half a year. That's just want to showcase that sometimes technical is helpful. So at the point of time when I see it break away from the range, it got me excited and try to understand about. So what about shipping line? You know. That was 2022. China still locked down. Maybe market sensing that China is going to open up, yeah, for shipping industry to grow. So is there a value proposition you're going to squeeze in a little bit? So, by the way, I'm not trying to showcase Yang Zijiang, but I'm just trying to showcase to you that there's a lot of Asia stock that belongs to this stage right now. So the opportunity is in abundance at the value stage. So talk to your broker. Maybe on your end, you can recognize Which one is it? Then you call your broker to understand the financial numbers of particular stocks. Okay, so that's Yang Zijiang, one example. And let me just move to the next segment. Okay, we're moving quite fast. Maybe after this segment, we'll take a break at 8 p.m. Okay, so now I'm going to cover about, the next segment we're going into is that I think I just covered about the this part. That means I'm going to move backwards, on the current trend, on why I have started this campaign of trade the US market, accumulate Asia, and buy commodity. So buy commodity I've explained to you later on. Okay, so at least I covered this part. Why March, the third week of 2022, I've coined this campaign personally. I think that will bring me forward for next many years to come. I think I'll still continue to be on the mode. Now, let's talk about the banking crisis, the next subject here. Banking crisis, what's happening, what's next? So that's what we have discussed last week. So we're going to talk about US market, how to trade the US market. Now, why volatility is coming soon in the US market? Now, I still remember the first few slides that I demonstrated. I break this downtrend line, and I expect the first quarter at least to move up. After that, now we're entering second quarter, it may hit a high point, then market enter into a volatility. Now, why is it so? Now, because of bank run, and again, you may want to take a picture of this, but anyway, this session is being recorded, so you can go back to review it. Because this chart became so precious, it became a commodities right now. Why? Because on the 1st of May, I happened to capture this chart, and I put some footnote here. And on the 2nd of May 2023, this chart is no longer available. Why is it so? Because it's being delisted. So you can't find this chart anymore. So now how to look at whether there's next banking crisis, maybe what you can do if you have a lot of time, maybe you list out the top 30 bank of United States. So by the way, First Republic Bank and SVB, the size is about $212 billion before it collapsed. So where's the standing of SVB is 18 in the list, ranked 18. And it's big. And who is ranked 17? And by the way, ranked 18 is not out of 20 banks in the United States. United States have a total of 4,000 banks. Rank 18 is a big bank. And who is 17? At least there's some relative comparison here. 17 is American Express. Then you know that SVB is so huge. American Express, I think just across the street. American Express, right? So you can imagine SVB collapse is 212 billion. Out of the three banks that collapsed, which is Signature Bank, followed by First Republic Bank, all in the range of 200 billion. And Signature Bank is the smallest of all, about 110 billion US dollars. So this guy is also pretty big, about close to about 200 billion. And that is worrisome. Compared to 2007, also have three banks first collapse. 2007, of course, I'm referring to 2007 and 8 crisis. Three banks collapse, followed by, because it's contagion, followed by 25 banks collapse in 2008. And that's why we have 2007 and 8 crisis. And then the 2007, the banks, the size are just a few hundred million to maybe a few tens of billions, the three banks. But today, these three banks are in $100 to $200 billion range. So that's quite sizable and quite worrisome. And so this is how it works. And is the banking crisis over yet? Definitely not. Okay, so we have to keep track of it. The reason why of this banking crisis is because of too much money. Bank having too much money and the interest rate continue to move up. And the bank obligation is to pay you interest rate on your saving and fixed T. The problem with signature banks or SVB is that they lock themselves with a 10 years government bonds, pay them about 1.79% for next 10 years. The problem with them is that as interest rate move up, they have to pay you 4% interest rate. Then they're stuck, no money. So their problem for today's market is having too much problem. They roll into a 10 years commitment at 1.79% interest rate, and they're stuck for 10 years. they're having too much money problem on the rising interest rate. But when recession comes, if recession comes, it's even worse. It's going to be a credit crunch. It's just like 2007 and 8. What happened to 2007 and 8 is no money problem. So recession better don't come. If recession come, then the bank will have even a heavy burden. Yeah. So some of you looks a bit frowning, but it makes sense to you. So I just dropped some idea of understanding, right? So you continue to go and maybe if you frown a little bit, then you get some chat GPT to ask them questions. Okay. So what is the difference between maybe you can ask them question about current bank run having too much money problem? What do you mean? Maybe they can answer you. Yeah. So just want to demonstrate how big this three bank is. So the banking crisis definitely is not over yet, but I hope it's over. If not, at least we are prepared for it. Yeah. So nobody knows whether it's over because all this bank will not tell you. So my question is that SVB commit such a mistake, who else also commit such a mistake? Only time will tell. Yeah. So like what Warren Buffett always say, high tide, when the market is high tide, he cannot see who's naked. But when the tide is low, you can see who's naked, right? Yeah, that's why I say. So same thing, only time will tell. And so these are the three banks, and you can find them in FDIC's public information. And just want to give you a sense of how big SVB is. 212 billion, American Express in 17 out of 4,000 banks in the United States. So that's quite a worrisome sign. Yeah. Okay, so now, why do I demonstrate this chart? I do not know. Let me see next slide. Can I? Okay, just to demonstrate to you that in the context of during the beginning of the year, my projection is that first or maybe second quarter market will move up. Why? Because that the inflation seems to be under control. So technically and fundamentally, market have moved up right now. But come to a point we got to observe. Number one, I believe that as it move up, market will start to question, hey, bank run is still a question mark. Then you'll meet certain resistance, market will seldom may come. The other problem is that the next CPI, the following CPI, the next and after the following CPI, all these CPI are very important. Even if it continue to be stagnated like this, it is no good. Yeah. So even Fed paused the interest rate at 5.25%, it is no good because the borrowers still have to, if it pause, the borrowers still have to pay 5.25% interest rate every month. Borrowers, yeah, mortgage borrowers, they still have to pay. So that will eat up their profit margin. Of course, on the context of if a high interest rate, that's even worse. So now, even at a range inflation number, it is not good. So come to a point as the stock market rally, investor will start to realize that, hey, this is no good. You know, they'll start to consider bank run. That one, I have no idea how it will unfold, but it's good that we have a checklist to keep note of. And then the other one is inflation. These two things are important. Bank run is new because at the beginning of the year, I have no idea there's bank run, but now I have to add it in to my consideration. So keep track of all these, the two things. Then the yield has inverted. So last week we talked about inverted yield. So basically an inverted yield is dangerous because a very quick one, I know it's 8 p.m. already. Inverted yield is traditionally the floating rate. In Singapore, we call floating rate, right? But in US, I think they also call floating rate, but the term is called US Fed fund rate. But in Singapore context, we call floating rate to make it easier to understand, right? Floating rate today, floating rate is above the 2 years fixed rate or fixed tenure or 30 years. Can you see that? The float rate is above the 30 years interest rate or yield. And that's bad. Why? Because in a healthy yield curve, let's say 0.25%, and the 30 years yield say at 3 or 4%. So the bank business is that they borrow money from each other at 0.25 or from the central bank at 0.25, and they give loan to you, corporates, at maybe 2 years tenure at maybe 3%, and that's what they make. the difference that it made. But now making the banking business even tougher because the yield has inverted. The short end, the floating rate is higher than even the 2 years fixed rate. So there's no profit margin for the banks. Yeah, so you have to find that is difficult for the bank also. And when did this happen? Where the float rate higher than the 30 years or 2 years yield or tenure. In Singapore, we call 2 years tenure, right? For property investor, I think you're very familiar. So that was in the 80s. The blue represents the float rate. It's exceeded the other colors and it stay above. So you have to monitor this. All these are free information. Then continue to monitor this float rate. If float rate is above the 2 years, 5 years, 10 years, or 30 years, it means more trouble ahead. That means the inflation is not going to come down anytime soon. So is the banking crisis. So this one, take pictures. And where I get a source, I listed there from macro, micro. So it's all these are free information. So every month you just keep track of this blue line. Is the blue line above? By the way, I prepared this about 2 months ago. So today is even higher than 2 months ago. Yeah. So this will give us a sense that come to a point. Yeah, so we were quite right that the first, second quarter will move up. Come to a point, market will realize that we just mentioned banking crisis and inflation. Yeah, inflation will lead to higher interest rate. Yeah, so come to a point, market unsure, you'll start to come down. Then of course, I think the Congress, the central bank will do whatever they can. You'll support the market, you'll move up again. Yeah, so this is going to be a very exciting year for traders. Are you happy? Not to share. Yeah, so but at least we discussed about it, then something to look forward to. Yeah, the next meeting we come back to look at this chart, see how well it have take shape. Okay, so good. We are now at 8:05. Maybe we'll take a 10 minutes break or 5. Yeah, 10 minutes break. We come back 8:15 and we'll continue with this 30 years bonds. Yeah. Okay, just want to clarify the 1 cycle 4 stages, because I think I received one quite good question here, because I think he's talking about one stock. He say that does it mean that after decline, that particular stock will go back to income value and subsequently growth stage again? I think the answer is no. It really depends, because some of the stocks after enter decline stage, it go belly up. You'll never be listed. It's just like First Republic Bank, right? So I think I'll just give you it doesn't mean that every stock will go through cycle after cycle after cycle. So that one is to be realistic, yeah. So, but if most of the stocks, say for example, Apple, and if recession hits, yeah. So Apple is an outstanding company. If recession hits, Apple will also enter into a decline stage. Yeah, but I believe that Apple will stay for maybe another 1 generation come. I do not know how long. So then maybe Apple will continue to grow from decline, because recession Apple will hit no matter how great the company is, because whatever MNC, how great the MNC big company, they depends on who? They depends on the mass market. If the mass market also recession hits them, they got to pay cut, they lost their job, they will not buy Apple phone, they will not chase after the latest Apple phone, or change one Apple phone every 2 years, right? They will wait until 4 years later, 5 years later, then change the Apple phone. So the decline stage will even hit Apple if it comes. So for such a great company, I believe that you enter in a period of income value. The next cycle will come back to them again. So that's what I'm trying to say. But certain stocks, if you talk about the certain penny stocks, so sometimes they make a mistake and forever they're gone. Okay, just like First Republic Bank. Okay, so maybe I just take one question if you have before I move on. Yes, sir. This is a very good question that nobody knows. Yeah, so but the element that we discussed, there's a good chance that US will enter a recession. Because if the inflation continue to rise, means that interest rate pause is no good, okay? Up is even worse. So pause, can you imagine the corporates, most of them are on loans. it means that they also will eat up their net profit as well. So that may, if it pause, interest rate pause, and the interest rate in US remain at 5%, is not what Jerome Powell wanted to see. He make it very clear on the 3rd of May, after the latest hike, 25 basis point, there's always a conference. I would really encourage you to watch that 40 to 50 minutes conference. Hear what the most important men say. Yeah, so it's great to see we have a full house tonight. You all come for technical class, is great. But can I say that it's even more important to hear from him? So yeah, but it's so sad when I look at the YouTube, there's only 16,000 views from a very important man. Yeah, worldwide. It's like, oh, that's quite sad. So during the 3rd of May, every reporter tried to squeeze an answer from him about, do you think that's what reporters say? Many, I think at least 3 or 4 questions, asked him, do you think that you will pause the interest rate? But he remained very firm. He never said that he will pause the interest rate. He said we'll continue to monitor the outcome. We continue to maintain the policy of wanting to see inflation come down to 2% in a sustained way. He maintained his composure. So one of the reporters said that, how about you mark down your benchmark instead of 2%, can you mark down to 3? Then he said, no, we will maintain at 2. He's very firm about this because for the last 40 years, it was at 2%, averagely. It works for everyone. It works for investor because every year your assets increase by 2%, you'll be happy. And for workers, every year your expenses increase by 2%, it is manageable so that you can ask for pay rise. Yeah, so it's a model, unexplained model, but when I say it makes sense, right? Investor 2% rise, not too bad. Yeah, it's bad, but not too bad. Yeah, so you won't complain. So workers, you pay 2% extra more for your food, I think is okay as well. So I think a good question. A lot of things that we do not know, we do not, but I think we can time the market. I think today the demonstration, you can see that we actually can time the market, but before that, we have to understand certain data point. So when I understand certain data point, we just look out for technical analysis. But today, I think I explained beyond technical analysis is behavioral science. Right? So when you look at a chart, you have to look beyond just technical analysis. So try not to be a zombie trader. Zombie trader means that you follow blindly. The chart cross up, I buy. The chart cross down, I sell. But you do not have a basis of understanding why. Yeah. So now let's go and look at the title, the next one. So we spoke about the market trend. We talked about banking crisis not over yet. So how did I come about knowing that the crisis is around the corner back then at the point in time? Because I believe that interest rate will not may pause temporarily, but after that it will continue to move up for interest rate. Yeah. So cutting, I think, is not in the equation, at least for this year. So let's look at what happened here in when did I start to, in 2021, if you've been following some of my free webinar and work with different partners, I've been advocating in 2021, inflation is coming. Back then, remember 2021, is there inflation? No, but I keep on talking about inflation is coming. Now, let's look at the bonds. Now, so important thing is that how you look at whether interest rates continue to rise or the yield curve is going to get inverted. We look at the bonds. Bonds and yield are inversed. Bonds come down, yield move up. Okay. If you want to understand the relationship between bonds and yield, you just go and Google. They will give you a very good description. But I will not describe about what is bonds and yield. Just remember this formula. Bond market come down, yield will go up. Yield is interest rate. Investor look at yield. Borrowers, we look at interest rate. Okay, yeah. So yield and interest rate, they are same. Yield go up, interest rate go up. So again, bonds come down, yield go up. Bonds come down, interest rate go up. Okay, so now when did I have the idea that the bonds is coming down, inflation is moving up? But of course, there are data point of understanding even way before 2021. Yeah. So now, back then, technically, that's what I see. Let me just go to bonds. Search for the bonds market. So bonds market, then I shared, it was on the 29th of March 2022. So I share about these bonds, and I saw there's this inverted hammer way back in 2016. So some of you maybe have connected with me through SGX Academy. Yeah, so I do some program back then with them as well. But in the year 2020, right at the COVID-19, I also saw another inverted hammer. Yeah, inverted hammer. If you draw a straight line across, I could see that the bonds has been testing the high, come down, testing the high, come down. So it tried 2 times, it formed a double top. Yeah, so this inverted yield, or rather not inverted, the inverted hammer, to me is quite psychological. So basically just to understand that it tests, it tried to ram up, but it failed. Okay, so in 2020, it tried to ram up. At the end of the year, it failed. It formed an inverted hammer. So that's psychological kind of how I decode technical analysis. Yeah, so you just have to look that into it a bit more intimately. Now let's look at the 30 years bonds futures. So this is a monthly chart. Earlier we'll look at the yearly chart. Okay, when I play around with time frame, that's what I saw in 2020, March 2020. I saw another inverted hammer. And earlier, what I shared with you on this weekly forum, it was a weekly chart. But on this monthly chart, I saw this. And in history, I do not see much of this for the last 40 years in the bonds. So this became a very represented turnaround. It could be a turnaround back then in the month of March 2020. Yeah, so all these candlesticks are quite precious, especially hammer, inverted hammer. So try to understand and read into it, and especially understand the psychology behind of all this candlestick development. I think next month I will have a session. It's a free session with SGX webinar. I will bring you to understand about hammer or rather candlestick psychologically. So after that, the bonds came down, right? Now, as the bonds came down, interest rate move up. Okay, yeah, so I have to understand this principle. Now, let's see if I have 12 months, which is a yearly chart, and where's the bonds heading? I think bonds are just, unfortunately, I don't have the 40 years data. I do not know why. It used to have, that's what we're seeing on the yearly chart, inverted hammer, another inverted hammer. And if I'm going to construct, so in the perspective of from 1980s until today on the yearly chart, I've never seen this period of market trying to test a high and it come down. Let me just draw a horizontal line across. Okay, so maybe I draw it here. So you can see that the psychology is it tests, it come down. It tests again, it come down. So these are called a false break. Yeah. So and to me, this yearly chart in 2022 is just the beginning of a down move. Yeah. So to me, sometimes we have to understand certain logic here is that printing the money is not the way to go. Yeah, I know that for the last 40 years, US has been printing money. So since I was in secondary school in 1980s, the first time I heard about US is the greatest debtor of the world is from my Indonesian classmate in secondary school. So obviously it's much more knowledgeable than me. But that's the first time I heard when I was in secondary school. I'm 51 years old this year. So throughout my working career, we always know about printing money US, but it's never have been an issue, right? But because the bubble haven't cracked yet. But I can tell that this COVID-19, this war is the needle that pricked into this bubble. The gas is releasing now. And that's where we see the bank start to fail. It's not a few $100 million bank, but it's a $212 billion US dollars. But the good news is that I think that there's a flight to quality from the west to the east. And that's the best part. Okay, so I hope that you're seeing what I'm seeing here. Now, again, with disclaimer, what I'm saying can be wrong, completely wrong. So you have to check with your broker, check with your financial advisor. Okay, so that's what the bonds, that's why in 2021, I started advocating, I think the time is very near. You all better take a closer look at the inflation number. Okay, so that's the bonds market. And let's move on to the next one. And also discover about the yield. Okay, this one's a yield. I shared on the, let me go to the yield market. That we'll share about the, so when did I share about the yield? The yield I shared on the 26th July 2021. 26th July 2021. This one. So I share about the yield, and these are 5 years yield. It's just our 2 years fixed tenure, right? So back then was 0.7%. Yeah, I know it's 7.1, but it means that 0.7%. So can you imagine our 2 years mortgage rate, 5 years, if there's 5 years tenure is 0.7%. And that was then the reality. When did I share this? That was in 2021. And the interest rate is still at the very low point. Now, then today, where's the yield? Now, again, I say that when bond prices come down, yield go up, interest rate go up. And let's look at the yield. And earlier I shared about this 5 years yield, and that was in 2021. And where was this hammer? It was here. And today, where is this 5 years yield pricing at 3.75%? Then was at 0.7%. Of course, Singapore, most of us would like to look at the 2 years yield, and we can look at the 2 years yield as well, because it means a lot to us, right? 2 years fixed tenure. So, okay, I receive a lot of questions. Should I fix my mortgage rate? I say, I'm not a banker, I cannot advise you. But if you listen to my webinar more enough, I think you know where I'm heading, right? So from time to time, they try to squeeze a yes from me, but I just say, I'm so sorry, I cannot tell you. Check with your banker. So July 2021, it was about here. Yeah, so that's what I call the, if you look at the, understand the principle of every cycle, and that's what I mean by there was this range phase, and then there's the value stage. So the interest rate has been on the growth stage since 2021, right? Yeah. So you see, it's so interesting that you have to understand certain data point, then use chart to time. Of course, you will not be always on time, but just a few days late, few weeks late, or 1 or 2 months late is still, to me, is still on time. Yeah. So yeah, so I'm seeing that interest rate maybe will just move up and down for a while. Of course, then your banker will say that, oh, interest rate is coming down. Recently, I met with a banker who's running a family office. On Sunday, I asked him, so what do you think the interest rate will go? Then he said that, oh, I think interest rate will come down. Most of us hope that interest rate will come down for your personal reason. But I do not think so. Yeah, so interest rate, I do not think it will come down. But then they say, oh, but the 2 years and 5 years coming down. Actually, the 2 years and 5 years is not coming down. So how you should monitor interest rate is then monitor the float rate now. Okay, if the float rate is still high, it's not that the 2 and 5 years is not coming down. It's just stagnated. As long as the float rate is high, it will catch up later on. Yeah, so the float rate is important for you to monitor the direction of the interest rate. I hope that, so some property investor, I think that will help you, because that's a big investment portion. Then of course, all this trading are the sideline for most of us, right? Yeah. So let me just go to, so at least now you understand how to monitor interest rate. Look at the bonds. US bonds is important, not the Singapore one, because Singapore, all Asia country will have to follow US, because US dollar is still the reserve currency of the world. If they hike, we have to follow. If we don't hike, what will happen to our Sing dollar? Our Sing dollars will depreciate. For simple reason, because you can say that our central bank can choose not to hike, but that's not realistic. Because if US hike, we don't hike, then what will happen to Sing dollars? If we don't hike, investor will say that, wow, my banker called me, say that the US dollars is paying me 6% interest rate for my fixed D. Hey, Sing dollars still paying me 4%. I will convert to US dollars. So I sell Sing, buy US dollars, then Sing dollar depreciate. But that's where the Central Bank of Singapore would not want to see, because when Sing dollar depreciate, things will get expensive. Yeah, so we have to protect our currency, which I think in Singapore, we are in a very good position. At least the central bank have the budget and have the pocket to defend the Sing dollars. Yeah, so that's what they have been doing. So therefore, in this part, and especially in Singapore, compared to the whole world, you don't feel much of the inflation, except we complain about a house and a car, right? But I can tell that a house is still affordable. It sounds like I'm a government, but I'm not, right? Because if you want to get married and start a family, you can buy a house at $250,000 BTO, but it's all about location. Yishun, yeah. I think today you can start a family at 250,000 with a 4-room flat in Yishun, because after COVID, the world is connected. You can work anywhere. Yeah. So if I were to restart my life, it's not possible. To get married, I think I'll buy Yishun. Yeah. Yeah. So Ken is possible. Yeah. Just go and ask Google the cheapest. I think it will show you, no? Yeah, literally go and check. Is there a $250,000 house available in Singapore? There is. So if you have children, ask them to go and get it. If you want to get married, don't think too hard. Start young, make babies. Then when you are 51 years old, my babies are all teenager. The oldest is probably 21 next year. Yeah. So they have more time to do all this fun, right? I still have another maybe 50 years to do, so I'm excited. Okay, now let's talk about inflation remains stubbornly high. So I think you have some background. Let me just talk about this, that I'm going to show you the next video. Let me mute this first before the advertisements start to kick in.
When inflation is down, so it will be the interest rate. And let's look at the gold market here, is that in the 80s to the year 2000, so is the gold as well. Gold is commodities, and in my opinion, gold is still one of the best inflation hedge commodities around the world. And when did the inflation start to pick up? As we look at this gold market here, the inflation start to pick up since the year 2000 to current. Now, and what happened to the last 20 years for this interest rate here? And we could see that the last 20 years in this interest rate demonstration, the interest rate stay stagnant for the last 20 years.
Also means that inflation stays stagnant for the last 20 years. So therefore, I feel that in 2000, we're living in borrowed time. Borrowed time. Why? Because the inflation really gets started in year 2000. 2000, when was the gold? The gold was at $200. Yeah, gold was at $280 to be specific. But since then, gold has been moving up. Yeah, so that's 4. So that's gold, right? Now you can see that year 2000, gold was at $280, and 2020 gold hit a high of 2000. I think it's 2000. It's not the year 2002. 2020. It happened that hit the price of the gold is at $2,020. Can you imagine how many folds is that? So who say that inflation, gold is no good? Gold is good. Yeah, because those who say gold are no good because they do not understand. Gold has been appreciating for the last 20 years. From $250 to $2,000, how many times is that? That's about 8 to 9 times. Yeah. So therefore, later I'm going to bring you to understand about gold is also equal to US dollars. And that's a danger point here, because if gold go up, it means that US dollars is coming down. Okay, later I explain to you very shortly. Okay, let me just fast forward a little bit here. So we're living in the borrowed time. This is interest rate when it's stagnant. You also refer to inflation have stagnated over the last 20 years. Okay, so I'm done with all my YouTube clips. So these YouTubes are freely available. So if you want, just go and view it. Where you can find my YouTube channel, you can go to Invest and Trade with Insight. You will find. So every week I'll try to post something fresh from the market. Yeah, just about 6 minutes video. So to keep all of us update what's happening. And okay. So now look at gold. So in the short while I explained to you the importance of gold. Gold is in opposite of US dollars. So you have to look at gold. It's not just a commodities, not a yellow gold, not a hard gold. Gold is currency, by the way. Gold is currency. How precious gold is that I can buy a gold coin, cross the custom. Yeah, so I don't, once you wear an accessory, even if worth more than $20,000, I don't think you'll be stopped. Yeah, so far I don't have a gold coin worth 20,000, so I do not know. Yeah, so I don't think you'll be stopped. But if you can go across the other world, you can convert to other currency, the same value. So gold is a currency. So what kind of currency is gold against? Because every currency is always a pair. When I talk about dollar ringgit or Sing dollar ringgit, it's always about, if a Sing dollar ringgit go higher, Of course, now it's 3.35. Why I know? Because Monday I was in JB eating crab. Yeah, so I'm using this UTEP card, and it's very good. 3.35. So I was very happy. Okay, so 3.35 is it go to 3.35, go to 3.6 means that Sing dollar strengthened. It also means that the ringgit weakened. So it's always one pair, one side go up, the other side suffer, right? So the goal is a currency against what? US dollars. If gold you move up, US dollars come down. That's about it. You have to look at gold as a currency against the US dollars, which it is. Yeah. So now let's look at gold. And among all the currency that I'm equating of the 2020, that's where almost all market, stock market, commodity market, all reached the low. At one point, the gold or oil go below zero, minus 30 or 40 US dollars. I think we still remember, right? Yeah, so from there, mostly all the commodities have moved up. So actually, gold is taking the lead. Can you see that gold has been testing the top side for 3 times, and it still maintained high? Yeah, so I believe that the rest of the commodities will pick up subsequently. So because all these commodities are priced in what? In US dollars. Yeah, if gold go up means that the other commodities will go up as well. Yeah. So that's why I'm saying that continue to keep track of the commodities. So therefore, I say that after third week of 2020-22, my campaign is trade the US market. I'm not interested to buy and hold, be passive on the US stock, and accumulate on Asia. I'm not exactly sure when Asia will go up, but I believe that there's some flight to quality in time. When I say time, it can take a few years to come. But commodity is, to me, is quite a no-brainer. Now there's a dip. I will look for every opportunity to buy on it. Not today, not tomorrow, not next week, but you call your broker when it's the best time to buy commodities. Yeah. So, and let me just give you an equation about why I say gold is a currency. Why? Because now this is 2020, the last 20 years. The last 20 years, gold, US dollars. Okay, now dollar index. Now between this time frame, the same time frame from 2001 to 2008 and 10, US dollars depreciate by 66%. But look at what happened to gold. In the same time frame, gold has appreciated 6 times. Can you see that? Now, during this period from 2011 to 2017, the US dollars have gained 47%, 46%, and gold has dropped the same magnitude. Yeah. And between this year to this year, US dollars depreciated by 20%. And look at how much gold have appreciated. 5 times. Can you see that each time US dollars drop, gold appreciate few times more? Yeah. So that was this one prepared about maybe during the beginning of the year. So at the point in time, I suspect that gold will drop. Then of course there's some debate among the weekly forum say that how can the dollar drop because the US dollar's been increasing interest rate. When increased interest rate will bring attractiveness to the US dollars. US dollars will go up. But sometimes I trust my technical more than my gut feeling or my own knowledge. So I say, but technical shows me that it's coming down. Let's see. So indeed, it's true. And that was a presentation I made during October, November last year. So I based on studies, I realized that the US dollars will come down and the gold will continue to move up. So are we right? I think we're quite right. From there, the US dollars went down by 18% from October, November last year until the recent low. And then the gold is touching this high again. Is testing about 2,100 again. Yeah, so go and check. I didn't prepare the slides. Okay, so now coming to the last point before we take on the Q&A, but I thought that I want to share with you this because this is really interesting. I want to compare to 2019-29 to today's market. Yeah, so but I do not want you to feel that there's so much burden coming to this place because then IG will not invite me to come back to share again. But I just want to share with you my very factual observation to prepare that what's coming ahead. So if you're prepared, you have made preparation, then you will see opportunity more than outside these 4 walls. Yeah, you will see opportunity. Now, so like what I say, what is behavioral science or market psychology is that we believe that one behavior will lead to another behavior. One bad behavior will lead to a bad outcome. Yeah. So, And it tends to repeat itself. It tends to repeat itself. Now, let me bring you back to 1929. Okay, so of course, 1929, we know that it was a period of Great Depression. And that was the time where we have a U-shaped recovery. So after the 1932, 33, the market continued to stay on the low point for less than 10 years, but 10 years period. So that was a time, if you talk about U-shaped recovery, and that was a U-shape. U-shape means that very prolonged. People feel very painful for a very long time. But I hope that this coming recession will not be U-shaped. So far, I think we've all experienced V-shaped recovery because the central bank has been intervening, not here, but I'm referring to the US side. They've been printing, intervening, but this thing have cracked. Yeah, you know, all these are not sustainable. You'll come to a point that it will crack. And I think today we study all of data points showing us. So what I'm saying here is that these few points are important from A to D and F to J. Now, let me read to you what happened to 1929. Okay. Now, from A to E, in reference to today's market, it seems that already happened. So from F to J in 1929, it has happened. But in today's context, it has not happened. Okay, now, but before that, let's look at it structurally. These are what I call in rolling good times, the market went euphoria. And this meltdown is important. This is what I call the first crack. Yeah, first crack means that the egg really cracked, bubble burst. So sometime along the timeline, the central bank will do whatever to save the market. It went up. Then subsequently, the problem never solved. It still come down. So now looking at today's market is this. The first crack is you can blame it on COVID. You can blame it on Ukraine war. But these are just a catalyst to the existing problem. Yeah. So to me is COVID and the Ukraine war speed up the underlying problem, underlying issue. Yeah, it opened up a can of worms. And of course, the Fed have do the most responsible thing is to increase the interest rate. So that kind of help. Yeah, the inflation kind of tame, it move up. But the banking crisis is a red flag. Yeah, and you talk about huge bank, about 200 billion, the kind of size, 100 to 200 billion, the kind of size. So it's a concern. And I wanted to see opportunity. Yeah, because back in 20 years ago, when I first started my career, there's no such thing as IG is around that we can short the market. Yeah, all these shorting options are available for the rich guy with bankers helping them. Hey, but today IG is here and they have all this instrument for us to short, to hedge. If you don't let the short, at least you hedge. Yeah. Yeah, so over the last 10 years, I think all these players are in the market. I think it's even for a small retailer with a quantum of say 100 Sing dollars, you can do something. Yeah, so focus on the skill, because $100, if you make $100, you make $5 out of $100, that's 5% gain. But that's trading, right? So if you can get every time the quantum of $100 down, and you can make 5% of $5, don't despise the small beginnings, because the less is small. So you understand the concept. If you keep on rolling this 100, you can make multiple 5. But sometimes you lost, because trading you have to accept loss. Multiple 5 of wins, some losses at 5, it will come amalgamate to a profit after all. Okay, so now let's study about A to E, which already happened, but that was back in 1929. There are several factors, so we discuss about tonight a lot of factors. The stock rose rapidly. We have experienced that. Yeah, in the before pre-COVID, you can see that stock rose rapidly. Yeah, after Donald Trump came to power, the stock market rose rapidly. And he's very proud. Yeah, Donald Trump said, see, stock market went up. So then after that, there's chain of events that's happening, which is right now. There's chain of events. Yeah, from high inflation, bank collapse, don't know what's next. Chain of events. That was in 1929. Then point number E is that bank had invested heavily. And I think we just heard about that. SVB invested heavily on 10 years bonds. Yeah, I think their mistake is mismanagement. They park too much in one single instrument, which is 10 years bonds. Then bank fails. Point E, bank fails. We have that at the beginning. I hope not. Yeah. No, I hope is at, I hope that's it. Yeah, so no more bank runs. Although I talk about it, but I hope that it will not come to pass. Yeah, although I talk about it, but I hope that it will not come to pass, because then it will be a very sad thing for all of us. But at least for this 4 wars tonight, I think we're quite prepared. Yeah, so don't over leverage. So over the last 3 years, I've been deleveraged. Yeah, so I even have a little quarrel with my wife. Why do I deleverage? Yeah, because you want to leverage up. I said don't want. So, but I hold my ground. But today, I think all of us, 2 of us, are very happy. Yeah. So bank fails now. Could it be next, which is 1929? It really happened. Now, so the next one we have to keep track what's happening. There's a decrease in the money supply. And now really talk about it, the central bank say that tighten credits. Now, when they say tighten credit, what does it mean? It means that they do not want to lend out money loosely anymore. That's called tightening credits, right? It's already talked about, which I think it will happen because the yield curve already inverted. How to give loans? The bank will lose money. And point number G is that decrease production and employment. So if that happened, that's recession already. So recession happened, everything will decrease in production and employment. And point number I is that decline spending and investment. So when recession hits, and that's what the example of Apple, right? Even a great company will also enter in decline stage. No need to think too hard about it. Yeah, or don't have to be too sentimental about Apple. I know you're holding an Apple handphone. Yeah, no need to be so sentimental. So now, and then point J or point I is that decline spending and investment. When it happens, it's like a chain of event, and point J, the cycle continue. So these are things that I hope that's helpful, that you keep track of what's happening. And to stay connected, you can follow my Facebook page. So every day I will read news. I enjoy reading news, but I read, because now there's a lot of fake news, right? So I read from 4 sources of news on the same news. Channel News Asia, which is from Singapore or Asia. I read about CNN or CNBC from US. I also read news from China as well, the same news. I also read news, the same news from the Middle East. So after that, I need to strike a balance. After when I strike a balance, I'll check with my chart, because the chart will tell me the real story, the supply, demand, the flow. So after I read complex news, I will give my digest in my own words. I'll put it on my Facebook page, so you can follow or like it. It's called Konhao. My 2 names joined together. Yeah. And then my YouTube channel is Invest and Trade with Insight. You can like, because every week I will try my best to post 1 video like what you saw, something on that context. Yeah. And if you find that what I share is really interesting about the weekly forum, you can check it out on my website, waypedia.com. And lastly, that's my email. You can send your question to me. I welcome your question, but not transactional question. When I say transactional question, means that, how can we buy Top Glove? Can we buy dollar? US dollars sing? No, those are broker questions. You can ask a broker, because I do not want to be responsible for your loss and win. But if you ask me about, I find that what you describe is not too accurate. How about you consider this and that? I welcome that kind of question. So you help me to improve my skill. So with that, I think we take maybe just 5 minutes for Q&A. I think it's a long night. Everybody's tired. Yeah. Any questions that you have? Yes. Maybe the gentleman behind first. Yeah. Okay. I think it's a very good question. I do not know, because bank, what they invest, they won't tell you. Yeah. So you just got to watch out very closely. And I think it's a global problem. Yeah, because truly that the banks around the world have a lot of money. So back in 2020 and 21. They have so much money, they have to invest the money to pay you the interest. So is SVB have committed that mistake? I hope the rest of the banks, they don't make the kind of mistake where they use most of the money to invest in one product. Then that became a problem. So I do not have an answer for your question, but it's a good thought. Therefore, even for Singapore, I'm not too concerned about the 3 banks in Singapore, but I'm more concerned about the other foreign bank in Singapore. Yeah. Okay, so in Singapore, I think our banks are fine, but I cannot speak for other banks that in Singapore that pay me high fixed You know what I'm talking about, yeah. So continue to monitor that, and maybe you want to keep, if you're not in the 10 or $20 million category. I think most of us, including myself, no, we're not in the category. So we just put every bank 75,000. Yeah, that will keep you very safe. Yeah, but if it belongs to that $20 million category, you have to look for your advisor. How can you do better to protect your money? Yes, yes, sir. Yeah, I think definitely. But I think after Donald Trump being in power, I think he's the one that maybe started this movement of looking inwards. So all these big countries are all looking inwards now. If you notice that the China are actually advocating for domestic spending. Yeah, domestic spending, right? So if I in 2021 can start to advocate that inflation is coming, and then inflation is not there yet. Yeah. Think back, 2021, is there inflation? No. But I start to advocate in my webinars, or some of you may have attended almost every one other months I talk about that, right? If I individual can advocate and I know that inflation is coming, so what's more about the China think tank? I think they know, right? Then now maybe you have a better understanding why 2021 and 22, they are so hard-handed on their property speculation. Because they know that if they allow that for the property developer to be greedy, to squeeze their retail investor dry, to getting more borrowed money, come today with inflation, high interest rate, they will suffer. So there's a reason why 2021 and 22, they are so hard-handed on this property market in the very sector, because I think what I'm seeing then, because I have some China friends that complain to me, what is their government doing, this and that, but I don't want to debate with them because I think they are doing a very good job. They need to clean up the system to prepare for what's coming ahead. So therefore, I think that the flight to quality is real, and I think definitely China are prepared, and the Asia country are coming together. Not all, but I think most of us recognize that we're coming together to make this economy works. Yeah, so that's what I think. When recession hit, again, I say that recession hit, everyone will suffer. But I think this time around, Asia are prepared for that because we've been through Asia crisis in 1997. We know how bad it was. If you do not know how bad it is or was, check with your Indonesia friends. Yeah, those, I think most of us are Indonesia friends. If you're in the 40s or 50s, check with them. They will remember how bad 1997 Asia crisis was. We do not want to go back there again. Yeah. So with that, thank you. And for all your attention, it's a pleasure to be here. And again, I want to thank you, Ethan and IG, for inviting me to share tonight. Thank you. So you have a good night, and I hope that you can take what I shared tonight to flourish and do better. Thank you.